Hello, welcome to Alex Financial Insight. In today's video, we will review earnings growth, stability, and the valuation of the leading tech companies. And this is a continuation from the previous videos. Okay, let's start. Earnings growth, stability, and valuation. The question we ask is, are biggest tech stock overvalued or fairly priced? This is a comparative analysis of leading companies. We look at profitability, we look at risk, and market valuation. So, introduction. And basically, as I mentioned, this analysis is a continuation of previous videos in which I conducted a fundamental analysis of the leading tech companies. Just to specify what we did in the previous videos, basically we tried to look at the comparative stock price growth analysis. We tried to look at revenue growth versus stock price growth analysis. Also, we tried to look at the research and development expense ratios for those 5 leading tech companies. And based on those analysis, I tried to categorize, investment suitability of each of the companies. Okay, what is the objective of today's video? Is we're gonna review it here. So basically, we ask a question: are the biggest tech stocks like Microsoft, Apple, Amazon, Google, and nvidia overpriced, or are they still a good buy? This is really a question that is widely asked by investors. And why is this question important? Basically, there is this understanding that tech stocks have been leading the market, okay? But on the other hand, investors are worried about valuation, okay? Because they are driving the market and there is a concern that they may be overvalued, okay? So in this video, we are going to analyze earnings growth, volatility, and valuation. And I use the data from 2022 to 2024. So this is a trend of the earnings growth or earnings per share of these leading tech companies. So as you can see, the period covered is from 2002 to 2024. And the green graph on the top is Microsoft, and then the next one is nvidia, and the blue graph is Amazon, and then a dark green is Apple, and then the orange is Google. So basically, what you see is earnings per share of all companies increased through time, yeah, and the increase is high in recent years, obviously. And this table is a summary table, okay, of the earnings per share. So you see 3 rows here. The first row is for all period under consideration from year 2000 to 2024, and then in the next row, I try to see the average for the recent 3 years, and then on the last row, I try to calculate average for the recent 5 years. Okay, so as you can see, in all periods, Microsoft has the highest earning per share. Okay, and nvidia and Amazon, if you see all period, have the lowest earnings per share. Okay, and then Google and Apple have a fairly decent earnings per share. And the other thing we see is, like, if we see all periods, earnings per share is like small, and if you see, say for example, the last row, which is for recent 5 years, the earnings per share average increased substantially. And if you narrow down the time period to the recent 3 years, you can see actually the earnings per share has substantially increased for all of them, for all of the 5 companies that we are considering. So the question here is that, are these strong earnings growth going to continue. So now let us see volatility, okay, the earnings per share volatility. And basically what I did is I calculated the standard deviation of the earnings per share and that is what I'm calling as a volatility, okay, standard deviation. So as you can see now, Microsoft has the highest uh, standard deviation, or it has the highest volatility, and that is followed by Google and Apple. And Amazon and nvidia have like the lowest volatility as compared to the peers. So now I have earnings per share, I have the standard deviation, and therefore I calculated a standardized earning per share simply by dividing the earnings per share by the standard deviation for each company, and then this is a graph. This is a graph for standardized earnings per share, and as you can see, Microsoft is at the top, leading, then followed by nvidia here, and then Amazon, Apple, and Google. Okay, so the standardized earnings per share is also showing a significant growing trend, and that the growth is also reflected in the significantly reflected in the most recent years. And now let us see the summary table. This is a summary table of the standardized earnings per share. Same thing as the previous time, 3 rows. First row is for all years under consideration. Second row is for the most recent 3 years. And then the last row is for the recent 5 years. Okay. Definitely, as you can see, if you see all years, standardized earning per share is kind of low. Then as you move, for example, to if you consider just the average for the recent 5 years, it is now higher. If you see the most recent 3 years, it is higher than like the recent 5 years. Okay, basically what we see is like a growing standardized earnings per share. Okay, so Microsoft leads in a stable and a strong growth here too. Okay, across all 3 pairs, Microsoft has the highest standardized earnings per share. Okay, and then obviously nvidia and Amazon have the lowest earnings per share, and Apple and Google are like modest. We can consider that modest. Okay, now next let us see valuation, okay, or price to earnings ratio. Okay, price to earnings ratio, this table summarize that. So the stock price, the first row is about the stock price. This is the stock price as of February 12. And then the second row is earnings per share, 2024 earnings per share. And then the third row is the price earnings ratio. Okay. Now we compare the price earnings ratio, and nvidia is now the highest. Okay, you see nvidia has 51.23, and that is followed by Amazon, which has like 40.45, and then Microsoft, then Apple, Microsoft, and Google is the last. Okay, and a high price earnings ratio basically suggests a high growth expectation. So what did we notice? What did we observe? The summary of our findings is that when you see earnings grows, by that I mean earnings per share, strong earnings grows for all companies over the time period. That is what we noticed. And then when we see stability, Microsoft and Google show more volatility or less stability in terms of earnings per share, and nvidia is more stable. Then now when we move to valuation, which is a price to earnings ratio, nvidia and Amazon have the highest valuation. Maybe they are kind of overvalued, and while Google is like, it is really comparatively at a bargain. Yeah, it has the lowest uh, price earnings ratio. So now the question is, are tech stocks overvalued? Really, this depends on our investment goals. Yeah, whether we are looking at growth, whether we are looking at stability, or whether we are like considering value investing. Okay. So if an investor is a risk tolerant, then the investor can go for nvidia and Amazon. If an investor is seeking for stability, they can consider Microsoft and Apple. Comparatively, then we can see Google is like for value investing. Okay. So now, which tech stock do you think is the best buy? Okay, let me know in the comment. And also, if you find this helpful, hit like and subscribe, for more market insights. And thank you for watching.